What is a royalty company? Today, I want to talk about one of my favorite investment vehicles for gold. And
The Goldmobile.
yes, my favorite gold mobile, in fact. I believe it has a niche or a special role in the mining investment industry.
Yeah, well, I think they do. Most people think about precious metal investing and think of the two conventional ways to invest in it. The first being to hold on to bullion, gold or silver bullion, and the second being to buy gold or silver mining stocks.
Yeah,
But there's a third way to invest in gold and silver that we want to talk about today, right?
the gold royalty company.
Yep.
So let's give a little background about what a gold royalty company is.
Sure.
Building a mine takes extraordinary amounts of time and capital. There's the 4 stages of exploration, development, and then construction, and finally actual production of gold. And those take a lot of time and a lot of money.
Yeah, and I think that's why they call it a mine, because once you've done all that work and spent all that time and energy, it's you want it to be mine, you want it to be yours, you know.
It's mine.
Mine. But no, it is really expensive, and there was a couple of guys back in the 1980s who co-founded this idea, Pierre Lassonde being one of them, in the company Franco-Nevada, where they came up with a royalty model. That's, to my knowledge, is the first time in modern history where that was used to fund mining. It's an elegant solution to this problem. The process can take many years or hundreds of millions, if not billions of dollars of capital of forming a mine. And of course, the permitting process, which is you have to get a permit to do mining, to do a lot of things. It can be, unfortunately, depending on the jurisdiction, including in the Anglosphere, English-speaking countries, it can be subject to the political whims of whomever's in charge at the time. Of course, politically, they can help subsidize or accelerate mining, but they can also nationalize mines. They can discourage mining through very coarse, I think, barbaric permitting processes. And so you have to watch out for that. But royalty companies are exempt from this, aren't they?
Yeah, aside from just the permitting process, the financing process can be really difficult. So a traditional way to finance for a mining company is to either issue equity or to borrow debt. And financing from traditional lenders for mining companies can be very difficult.
There's 2 arms of how to look at it. The first is there is a political pressure, especially through the ESG movement, that's environment, social governance, to decrease mining project infrastructure funding and to have banks and other financial consortiums refuse to lend to them or refuse to sponsor projects, in addition to having certain government agencies restrict permitting processes. But then there's a second and then more apolitical or just intrinsic or natural reason that a lot of bankers don't like to invest in mining projects. And that's because the underlying value of what's being taken out, the commodity, in this case gold or silver, although they're really money more than commodities. But if you look at copper, zinc, other minerals, or fossil fuels, or I should say oil and natural gas, if you look at those, the prices of those fluctuate so much that it's hard for bankers to get a reliable fixed return on them. Bankers love to lend out money, and they love to get it back as forms of fixed, reliable, predictable, safe return. You don't have that in the commodity space. So that's an underpinning reason that the royalty model fits a good niche, because it's people who are thinking like bankers in a general sense, but they're not constrained by the banker's natural reluctance to invest in commodity producing businesses.
Yeah, that's a good point. Issuing shares is another way to finance a mining company, but it can be problematic if you have current shareholders whose shares are now being diluted.
Yeah, and if you understand the idea of inflation, you can easily understand the idea of shareholder dilution. Because if you think about inflation as being, you have dollars, a set amount of dollars, and then the government prints off a lot more dollars, let's say twice as many dollars. The value of the current dollars is decreased, right? And then with shares, it's the same idea. If you have shares of a stock and then the company issues or prints a whole bunch more shares, then those previous or existing shareholders get diluted similarly.
Right,
Same idea.
It's like inflation, but for shares.
Stock shares. Yeah. So this is where the royalty company...
This is where the royalty company kind of shines.
Right, exactly. Royalty companies, they exchange funding to miners for a share of the company's future or eventual production. That share of production is called the royalty. It might take several different forms. And chiefly, and I think gold and stackers can really relate to this one, it can be in the form of getting physical delivery of bullion from the mine delivered to the royalty, company.
Yeah, at a predetermined price that's usually like some percentage off of the current market value, or a set rate that's lower usually than market value. So they're able to guarantee basically getting some discount off of the price, and then they are able to sell that into the market at market price. So oftentimes they're able to make money on that spread.
Very good, very good. And I understand that's what's called a streaming model.
Yes.
And there are a couple different types of streaming models.
Well, that's the more common type, where the royalty company actually takes some portion of the bullion, basically the royalty, right off the top as it's being produced, and they have a predetermined price that they'll pay for it. That's usually some sort of discount. But less commonly, gold companies that are mining the gold will actually sell all of the gold into the market and then write a check to the royalty company for some percentage of that. It can either be a percentage of the revenue or a percentage of the profit. But that's a little less common. More often than not, the gold royalty company actually takes the physical bullion and they sell it themselves into the market, and that's the structure for their profitability.
So basically, these contracts allow for the royalty company to hold it and therefore to own it.
Yes.
Yeah.
And in fact, yeah, that's interesting because I think like 75% of the gold royalty companies prefer the physical bullion rather than just the cash.
Yeah.
Which I guess that seems like that's probably consistent with the type of people who probably are running these companies.
Yeah.
They like to hold it.
Yeah, exactly. So it sounds like from an investment point of view, there are many reasons to like royalty companies. What are some of yours that really stick out to you,
Yeah.
Alexis?
So for me, I think the biggest reason I like to invest in gold royalty companies, by and large, is...
By and large, I'd say I buy them small and I buy them medium and I buy them large. There's a lot of different royalty companies, large cap, mid cap, small cap.
Sure. But I guess there's two or three reasons that really stand out to me. The first is that with the prices for mining output already set, gold royalty companies are making money even when the price of gold might fall. And so while the shares of the gold royalty companies are obviously and necessarily tied to the price of gold, they often have higher highs than whatever gold underlying value is, and they also have higher lows than whatever the price of gold currently is at.
Let me make that concrete real quick. So basically, a prototypical contract might be a royalty can get gold from a mine for, let's say, $1,200 an ounce, and then let's say currently at $1,850 or so an ounce, they can sell that and then take the profit off from the difference. Or then if the gold price goes down to like $1,600, they can still make money off that spread, 16 minus 1,200. Or if the price goes up, then their profit goes from the difference of $1,850 and $1,200 to the difference of, let's say, $2,500 and $1,250.
Exactly,
right?
Exactly. And that's the trade-off that these gold mining companies are willing to make, because they can get financing, usually with less restrictions and more, I guess maybe more lenient repayment plans. So instead of, I think, taking interest on the debt, they are being paid back with the royalty. And so I think these mining companies are happy to have the exchange there. It's kind of mutually beneficial.
Well, yeah, they don't have to worry about short-term interest costs. If you're trying to drill a mine and it's going to take you 5 years, and every year during that 5 years you have to pay interest to a bank, well, that's sort of a tough model. Whereas if you can take that capital and then use it just for your cash costs, and then in year 5 you start producing gold and then you start paying it then, well, that's a better model for you as a miner.
It's far better. I mean, for a lot of gold mining companies, like the smallest delay in repayment can be enough to just put them totally under, because
they technically become insolvent.
They're carrying so much debt, and especially with the interest rates going higher, it's only more difficult to...
Sure, especially if you have to resecure financing at a higher interest rate.
Exactly.
Yeah. There's a second reason I think you really liked royalties, having something to do with diversification.
Yes. Well, the other reason I like them a lot is I do feel that they're a lot safer than just investing in a gold mining company, because these royalty companies are holding a very diverse portfolio of projects. So any mining company may only have 1 or 2 properties, and if 1 of 2 or 3 properties fail, then the company is probably going to become insolvent pretty quickly. So a royalty company is holding at any given time, it depends on the company. So, maybe 10, maybe 20 different projects. So if one fails,
Or hundreds, in the case of the larger ones.
Right.
Yeah.
So if one or two of those projects fail, if that's only 5% of the investment projects that you're holding, then you can weather that and sustain profitability even in the midst of failures.
Yeah, and even some of the larger mining companies, they might have a flagship project that maybe comprises 30 or 50% of the revenue, and then they'll have maybe 2, 3, 4, sometimes even 10 other projects. But all those projects might be within just 2 or 3 jurisdictions or elsewhere. With royalty companies, with a variety of different contracts, a variety of different mines, you get a whole bunch of different ore types, a whole bunch of different mine types in terms of the geological structure. You get a whole bunch of different jurisdictions, right?
Mm-hmm.
And a whole bunch of different currencies that you're paid in as well. So if you're getting paid in currencies, so it really is a natural diversifier.
Yeah, and I mean, kind of piggybacking off of that, they are also, because they have such, because they're experienced in project exploration and choosing projects that they want to invest in.
You mean administrators of royalty companies are?
Yes, the administrators of a gold royalty company. They have experience with this, so they're able to select for projects that have good management, that have good jurisdictions, that have good mine economies, and they're probably more adept at selecting the best than I would be, just looking at various mining companies and choosing which ones I think would be most profitable or most likely to succeed.
Yeah,
they have,
of course.
A track record of picking good projects.
Well, a lot of the board of directors of these companies or the administrators, they're geologists. They used to run mines in other careers, parts of their careers. So they're people who are very well suited and for the most part and talented in determining what good mine projects.
Right.
are.
I know you mentioned, like, for example, we sometimes talk about maybe investing in oil, and I know you've mentioned that's something that's sort of hard from the outside, not being someone that's in that industry, to really know like which projects are worth investing and which ones might not be.
What people are trustworthy.
Right.
Yeah.
And therefore, you've mentioned that if you were to invest in oil companies, you may seek like an independent third party firm who kind of, specializes. Who specializes in that because they have the, I don't know what the right word
Experience.
is. They have the experience or like the knowledge.
skill
They
set.
have, they're like in that industry. So therefore they can help guide, which projects would be good investments for individual independent investors. Likewise, this is essentially the same thing, except you don't have to go pay for some financial advisor, or I wouldn't even call it that, maybe a third party like consultant company to do that work for you. Instead, you can just invest in that company and kind of similarly have someone kind of helping you, kind of holding your hand through the process of picking good mining projects.
Sure. Yeah, you're utilizing the intellectual capital of the people who run the royalty company that you don't have. That for most people, including very intelligent people, would take at least months of dedicated research, if not years of research and experience to get. And
even that, still, those people, unless they're going to go travel to the mine projects, meet the
mine operators,
the executives,
staff,
the
kick
staff.
the rocks, as they say.
Right. I mean, that's a huge undertaking, and most people who are investing can't do that. But if you have a company who is already doing that and you can invest in them, you don't even have to pay them. There's not some sort of service fee you're paying them.
Right.
It's just I think that is just a really big appeal for me. The diversification and the kind of the experience and the track record that these individuals who run the companies have in picking winners.
Yeah, well, you mentioned there's no service fee, but just generally speaking, royalty companies, they don't operate the mines themselves, so they don't have to deal with the huge infrastructure, producing costs, and operating costs that a lot of mines have to deal with, right?
Yeah, and they have a lot less employees. Gold royalty companies globally, I think, always are leaders when it comes to profitability per employee. If you look at the most profitable companies per individual, per employee, gold royalty companies always are at the top of the list. They have hundreds of millions of dollars in profit per employee, just because it's a relatively low level of infrastructure that the company needs.
Yeah. And that's right up there with a lot of the high beta tech companies in terms of revenue per employee. Yeah.
Yeah.
Yeah. Yeah, there's one large royalty company. They also have low debt. So in Q3 2022, they had $8 billion in assets, including $1 billion in cash on hands, cash on hand, and 264 million or 0.264 billion in total liabilities. So that's 4 times as much cash as their liabilities, which means they're no debt.
Yeah, and that's not an anomaly. I mean, almost all of these gold royalty companies have very, very little debt on their hands.
Yeah, and they're running through SG&A expenses, which would be the service fees, basically, for the administration, sales in general. Their SG&A expenses are pretty low too, so their cash burn rate is de minimis.
Yeah.
Yeah.
And that reminds me of one more thing I do like about gold royalty companies is
What's
that aside from not having to pay some sort of administration fee, you actually also get a dividend.
Divvies!
Well, don't get too excited because the dividend's only like 1%, but it's kind of icing on the cake. Even if it's a very small dividend, I'm very happy to take it, especially considering that the share price of these companies is oftentimes, accelerating at a little bit of a faster clip than even the price of gold would be. So you already have that, plus a little dividend, just makes the deal a little sweeter.
Yeah. So you like the
Yeah.
1 or 2% dividend on top of the potentially higher capital appreciation and potentially also, although not guaranteed, a potentially lesser capital drawdown in case there's a decrease in gold price.
Yeah. So,
Okay.
I mean, I can't really think of any other reasons that I like them, but I have really no reasons to not like them. I think I made a pretty compelling case for them.
Yeah.
Are there anything else that you think are good or bad about gold royalty companies?
Well, I'll leave you with a few last remarks. One is they're a little bit of a newer model. They're kind of younger. I believe Pierre Lassonde and his co-founder, they developed it in 1983. So it's only been around for a little while, which by itself is not bad. It's a pretty successful model, and it's got a nice 43-year track record. So that's pretty good. The big downsides that I see to it are, a lot of the stacking community, a lot of people who buy gold and silver, they're trying to get away from having too much paper. That being said, maybe a little paper is okay, but this is at the end of the day paper. This is all based on, the whole business model is based on contracts, right? Yes, okay, they're getting physical delivery of bullion. That is excellent. That's fantastic. But what if those pieces of paper guaranteeing that physical delivery of bullion are no longer enforced? What if one country or another country or a couple countries decide, no, we're not going to, there's a collapse of rule of law, and they don't enforce those laws anymore. And therefore the mines don't owe that, right, anymore to the royalty company. Or what if governments decide to nationalize a royalty company? Just say, say to the shareholders, that was your royalty company. Well, now it's ours, right?
Yeah.
We're taking it on behalf of whatever government entity. So there are some risks there. Another one too is because it's paper or in many cases digital record keeping. If a brokerage account suffers an outage for whatever reason, maybe electronic infrastructure issue. Maybe there's a shutdown of the banking system for whatever reason by the government or by banks themselves, and then brokers, a lot of whom are also functioning as banks separately, they also close down, right? What if there's a temporary suspension of brokerage activity, or the stock market's shut down too, and you can't sell your shares or get dividends, or for maybe several days, weeks, or months? Well, that could be a big problem too. And of course, if in the long term, if that shutdown is long enough, and there's some sort of spike in gold price associated with that because people are flocking to gold as a safe haven, well, it might be hard for you to sell into that spike or receive a lot of the benefits of that spike if you wanted to for whatever reason, or just to redeem some of your capital so you can use it for other purposes. So would I predominantly so-called stack royalty companies? No, because they're not as reliable as the bullion itself, right?
Yeah. But I think when you talk about risk, I think that they're less risky than mining companies. I think they probably fall in between the two. So maybe gold, physical is your safest as far as risk because you physically have it, but you have the least returns. You have the mining companies, which are far riskier, but you have a greater likelihood of big returns.
Yeah.
And then you have your gold royalty company somewhere in the middle where, yes, it's not a physical asset, so therefore you do have these risks that are inherent to any paper asset, essentially. But you do have the benefit of probably getting a nicer return than just holding physical bullion.
Yeah, I think that sums it up pretty good.
So next time you have extra cash to invest, I think it's worth considering gold royalty companies. So let us know in the comments if you are an investor in gold royalty companies, some of your favorite ones.
Let us know if you want to hear ours. We'd love to hear yours. Maybe add it to our own watch list as well, to kind of find out what people are doing in the stacking space with royalty companies.
And we'll talk to you soon.
Till next time.